Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the confusing world of business filings. Today, we're diving into TRG Latin America Acquisitions Corp and some really interesting moves they've been making. This report covers a significant period for the company, marking the completion of their initial public offering, or IPO. Think of an IPO as a company's very first time selling its shares to the public on a stock exchange. It is a massive step for any business. Before we jump in, if you find value in uncovering the stories behind these corporate documents, make sure you hit that subscribe button. And hey, we've got a fantastic Discord community where we chat about these filings in real time. Link is in the description below. So TRG Latin America Acquisitions Corp. Here we're going to call them TRG Latin America Acquisitions Corp. For simplicity, filed this report on the 25th of February 2026. The big news is their IPO where they successfully sold 20 million units for a cool $200 million. That is a lot of money raised from investors. They even gave the underwriters, the folks who help sell the shares, an option to buy an additional 3 million units if there is a lot of demand. Now, what exactly did they sell as these units, you ask? Each unit is actually a bundle. It comes with one Class A ordinary share of the company, which is like a regular piece of ownership, and one share right. This share right is pretty neat. It gives the holder the right to get a small fraction, specifically 1/10 of another Class A ordinary share later on, usually when the company makes its first big business deal. This kind of structure is common for companies that are essentially looking for a business to acquire after they go public. They raise money first and then find the target. One thing to note is that the company is classifying itself as an emerging growth company. This means it is still relatively new and qualifies for some regulatory leniency. They've also elected not to use an extended transition period for new accounting standards, which suggests they're aiming to keep their financial reporting up to date quickly. The filing details several crucial agreements they entered into around their IPO. These are the fundamental contracts that set the rules for how the company will operate and how the IPO itself will function. We see an underwriting agreement with Santander US Capital Markets LLC. This is the main deal with the investment bank managing the IPO. Then there is a rights agreement with Continental Stock Transfer and Trust Company. This agreement clarifies how those share rights we talked about will be managed. An investment management trust agreement is also listed. This is super important because it is where a large chunk of the IPO money will be held. The money is put into a trust account and it can only be used for specific purposes, mainly to complete a business combination or for company liquidation if that combination doesn't happen. A registration rights agreement is also mentioned. This usually means that certain parties, often early investors or the company's founders, have the right to have their shares registered for public sale at a later date. They also signed a private placement units purchase agreement with their sponsor, TRG Latin America Acquisitions LLC. This is where they sold some units directly to the sponsor. And finally, there are agreements relating to the company's administration, indemnity for their officers and directors, and a letter agreement among the company, its executives, and the sponsor. These all set up the operational and legal framework for the newly public company. Digging a bit deeper into that private placement, TRG Latin America Acquisitions Corp sold 225,000 units to its sponsor for $10 per unit. This sale was done without going through the full public registration process, which is allowed under a specific exemption in the securities laws. Section 4A2. This ensures the sponsor gets a stake in the company right alongside the public investors. Let's talk about the leadership. In connection with the IPO, several individuals were appointed to the board of directors. These include Daniel Gerald, Miguel Kigel, and Thomas Wolf. Miguel Kigel was appointed chair of the audit committee, and Thomas Wolf is the chair of the compensation committee. These are key roles overseeing the company's financial health and executive pay. The filing also confirms they entered into indemnity agreements with these directors and executive officers. This is a standard practice where the company agrees to protect its leaders from potential lawsuits related to their work. As part of going public, the company also filed its amended and restated memorandum and articles of association. Think of this as the company's constitution. It outlines the rules and structure of the company itself. This was filed with the Cayman Islands Registrar of Companies, where the company is incorporated. This section details where the money from the IPO is going. A significant portion, $200 million, was placed in a US-based trust account managed by Continental Stock Transfer and Trust Company. This trust account is a critical part of their structure as a special purpose acquisition company, or SPAC. The money in this account is essentially secured for the purpose of finding and acquiring another business. It will only be released when they complete a business combination, or if they can't find one within a certain time frame, typically 24 months, in which case the money is returned to the public shareholders. Some funds are also set aside for taxes and winding up expenses. The company also issued press releases announcing the IPO's pricing and its closing. These are public announcements to inform investors and the market about these major milestones. It is important to understand the story here. TRG Latin America Acquisitions Corp is a SPAC. They went public without a specific business in mind yet. Their goal is to find a suitable private company and merge with it, effectively taking that private company public. The $200 million raised is their war chest to fund this acquisition. The structure with the trust account is designed to protect public investors because their money is held safely until a deal is actually done or returned to them. Looking at the sheer number of agreements signed on the 25th of February 2026, it highlights the intense activity happening behind the scenes to get the IPO done. From the underwriter agreement to the trust agreement and various other legal documents, this was a meticulously planned event. Now, let's put on our Warren Buffett hat and see what we can glean from this. The financial tables aren't traditionally detailed in an 8K filing like this, as it is more about announcing material events. However, the story is in the structure, by raising $200 million and putting it in trust. They've given themselves significant firepower to pursue an acquisition. The key metric for a SPAC is not its current financial performance, because it doesn't have much of an operating business yet, but rather its ability to successfully identify and execute a good acquisition. What are the strengths? They've successfully raised a substantial amount of capital, which is a big hurdle for any SPAC. The trust structure provides a safety net for investors, ensuring their money is safeguarded until a deal is presented. The experienced directors appointed to the board also suggest a level of competence in guiding the company's search for a target. What are the weaknesses and risks? The biggest risk is simply the inability to find a suitable business to acquire within the allotted timeframe, typically 24 months. If they fail, the company liquidates and investors get their money back, but the opportunity for growth is lost. Another risk is the quality of the eventual acquisition. A poorly chosen target could lead to significant losses for investors. SPACs have also faced increased scrutiny and regulatory attention, which could impact their ability to operate smoothly or attract attractive acquisition targets. In conclusion, TRG Latin America Acquisitions Corp has successfully completed its IPO, securing $200 million to fuel its acquisition strategy. The company is structured to protect its investors' capital while it searches for a business to merge with. The success of this venture will ultimately hinge on the management's ability to find and successfully integrate a valuable acquisition. It is a high-stakes game of finding the right opportunity in the market. Alright, that is our breakdown of TRG Latin America Acquisitions Corp. Its latest filing. What is your take on SPACs and their role in the market? Do you think they offer a good opportunity for investors? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out. And subscribe for more deep dives into corporate filings. And don't forget to check out our Discord community linked in the description. Thanks for watching, and we'll see you next time.